How's it going, everyone? My name is Jake with Trade Confident, and today I'm going to be talking to you about how to invest in a recession. Now, I very recently released a video talking about how I do not think the bottom of Bitcoin has hit yet. Now, I won't give any spoilers, but I will say there's a link down in the description for you to watch it. It's super important. It will tell you when, where, and why I think the Bitcoin bottom is coming. Now, it is coming soon, and I think it's going to be even lower than you think. So go ahead and watch that video before this one. But if you've watched that video, let's get started. Now, before we get started, I just wanted to mention, as we're talking about investing in a recession, that our Trade Confident members on our membership using our scalping strategy are up 440% over the S&P 500 in just 3.5 months. Most investors are just throwing money into the S&P 500, and if you were trading with us, you would have already beaten it by 440%. This is absolutely incredible. So if you want to learn how, stay tuned to the end of the video, and I'll show you how to join the membership. Now, on top of all this, we are now ready to introduce, we are going to be giving our members only technical analysis content every single week. This means no sales, nothing like that, just dead on technical analysis every single week for you to help inform your trades and investments long-term and short-term. No matter what kind of trader you are, you will not want to miss these videos, so be sure to check it out. Finally, before we get started, if you like this video, please like and subscribe. It really helps our channel grow, and we provide crypto education, content, and analysis for those that are looking to grow as a trader. Let's jump into the video. Let's learn how to invest in a recession. First, I gotta say this, I am not a financial advisor. I cannot provide financial advice, and all of this is for educational and entertainment purposes only. From here, I'm gonna talk to you about common practices in investing. These are common sense things that every investor should be following, as this is gonna provide the best risk management, and it is commonly accepted as the best route to take. Number one, you should be debt-free before you think about investing. This is mainly because high-interest debt and loans like credit cards are going to eat away at your funds. And it's actually been found that saving the money from paying off that debt tends to end up with more money in the long run than setting that money into an investment account. So if you have a high-interest debt, it's going to be eating away at your budget, and you won't be able to invest as much money, and it's just not going to be good in the long run. Because of this, it is highly, highly recommended to pay off those credit cards, pay off any high interest debt before you start investing. Number two is creating an emergency fund. I don't have to tell you guys, life happens, bad things happen, and it's best to be prepared in that, because when finances are involved, it can make things infinitely more stressful. And if you don't have to go into debt over emergencies, that is so ideal. Now, the common practice is to start with at least 2 months worth of emergency savings. This means all of your total expenses every single month. So if, say, you have $5,000 of expenses every single month, it's best practice to have at least $10,000 in this savings account. Now, the amount that you put into this emergency savings account varies from person to person based on your expenses, your needs, how much money you already have, and all of that. But best practice is 2 times your monthly expenses. Last point, number 3, is be prepared to lose every single penny that you put into the market. Now, I know this sounds counterintuitive. You're investing in order to not have to work. You're investing to create a better life and a better financial situation. Why should you be prepared to lose all your money? Now, it's very unlikely that you're going to lose all your money, but if you go into it as if this money just simply no longer exists, it means that you won't have to rely on it. It means that there's nothing riding on this. There's no high stakes, and the lower the stakes are when investing, the better trading decisions that you're going to be able to make and the better trades you are going to get into. Now, again, I know it sounds counterintuitive to be fully expecting to lose all your money when the point of investing is to gain money, but the lack of emotion, the ability to just stay calm makes for just such better trading decisions. Just take it from me. Every trader has made these emotional decisions, and most of the time they get burned. Finally, this is it. You are debt free. You have your emergency savings account ready, and you are prepared to lose every single penny you invest. Now is the time to put money in the market, and let me show you a great way to do that. Probably one of the most well-known traders in the world is Warren Buffett, and he is quoted as saying, "Be fearful when others are greedy, and greedy when others are fearful." Essentially what this means is just buy low, sell high. Now, I know this sounds really counterintuitive. Why would you want to put your money in the bear market? The prices are going to go down, things are going to get worse before they get better. Why would you want to put your money down in the bear market? Well, Investors are looking long term. While most of us are looking and trading within the next few days, investors are looking long term, years or even decades down the line, when prices are just going to continue going up and up and up. Just a few months ago, Bitcoin was worth $69,000 and now it's trading around 20,000, give or take a few $1,000s. Because of this, anybody that invested at the top has now lost a ton of money, but anybody investing now at the bottom has tremendous amounts of opportunity as the prices go up to hit new all-time highs. Now, I cannot guarantee this is going to happen. I cannot say for certain that Bitcoin will reach $69,000 again. I can't say for certain that your favorite altcoin is going to reach a new all-time high. Personally, I think it will. I do think that Bitcoin and many, many other cryptocurrencies are going to soar and make way more money than they ever had. But I cannot guarantee that it's going to happen, so please don't take this as financial advice. I can't guarantee it. Again, be prepared to lose every single cent you ever invest. Now, another point about this is that since its inception, the S&P 500 has returned year over year on average about 10% profit per year. Now, of course, there are exceptions to this. There's the dot-com bubble, there's the 2008 market crash, and right now we're in the middle of a recession. On the chart, you can see a downtrend. We are not heading up currently, but overall, year after year, over time, the S&P 500 has continued to return on average 10% every year. Like I said, there's been dips, but it always goes back up. And on the chart, you'll also see that Bitcoin, since its inception, has correlated upward with the S&P 500 since it was created. Because of this, we can assume that just on a technical analysis standpoint, just as the asset matures, that Bitcoin will continue rising and rising along with the S&P 500. As long as the economy is growing overall in the long term, I know it's not doing great right now, but as long as the economy, as the world economy grows, it is very, very valid to expect that Bitcoin and stocks, crypto, everything will continue to grow as an asset category. So just buying and holding long term should net you solid profits over time. Now, circling back to the point I was trying to make, the reason we invest in bear markets, the reason why we put tons and tons of money in, is because oftentimes it is a once in a lifetime opportunity to make crazy amounts of money on the bull run. While investors are trying to put in money, they're going to make less and less money as the price gets closer and closer to the top. And those that invest in the top are actually going to lose money as the prices fall again. While the price is going down, after it ends, the only place it can go is back up. Because of this, even if you don't quite hit the exact bottom, it's very likely that anywhere near the bottom, you're going to make massive profits compared to those entering in at the top. Now, if you've been in the crypto space for any amount of time, you have likely heard the term HODLing, or holding on for dear life. Crypto investors, especially those that invested at the peak near December of 2021, will know exactly how hard it can be to hold on to your crypto as it continues to crash and wildly move up and down as it goes. But long term, it is very worth holding on to, even if it's crazy, crazy volatile in the short term. A lot of Bitcoin investors fully expect it to continue correlating to the S&P 500 and moving up over time, despite the intense bear market that we're in. Even though it's dropped 70-80% from its all-time high, we are fully expecting it to go even higher than it ever did before, continuously making more and more times your original investment. Now, with the strategy called HODLing, all you're going to do is buy your crypto and you're just going to pretend it doesn't exist. You're going to put it into an account. You're going to put it into a hard storage wallet just so it's safe, and you're just going to hold it there. It's going to stay there, and it's going to continue growing and growing in value over time. Now, again, it may go up and down in value, but overall, it's trending upwards in the long term. So say 10 years from now, you've got yourself a really, really nice nest egg to retire on. Of course, how much you get in the long term depends on how much you invest in now. But this is the most common strategy, and most investors will include buying and holding at least partly into their investment strategy. An extremely effective way to do this is called dollar cost averaging. And again, similar to how you were putting monthly into your savings account, you just take a small amount of cash and put it into the cryptocurrency market every single paycheck, every month, however you decide works best for you. You dollar cost average into the market by just putting in money no matter what the price is. Over time, the prices will average out, and over time, as the market grows and grows, you will have fantastic entries and, again, a great nest egg to keep and hold on to as you get older and your investments become more and more valuable. Now, dollar cost averaging is a great strategy, but its main downfall is that it takes years and years to become truly effective and see those massive returns that you're looking for. In the meantime, what we like to do is scalp trade. Combining these two strategies, dollar cost averaging and scalping, allows us to take advantage of long-term profits while still making tons of money in the short term. As I said in the beginning of this video, our scalping strategy in just 3.5 months has returned 440% return over the S&P 500. In just 3.5 months, we have made 44% on our trades in just 3 months. This is a very short amount of time compared to the just 10% that the S&P 500 makes in an entire year. And we've done this despite being in a bear market, taking long trades and still making profit, making those 4% trades extremely effectively. On top of this, we actually still use dollar cost averaging as our risk management in our trades. As you'll notice, most of our trade setups will have a market entry and then several buy limits below it. If the price falls, what's going to happen is simply the price is going to fall, hit those buy limits, and you're going to dollar cost average automatically with that buy limit. If it falls lower, it'll hit another buy limit, dollar cost average, and your break-even point will lower, and you'll be in profit much faster as soon as the bull market hits. And you'll see much bigger returns because you're even more exposed to the market than you were before. This is why our trading strategy is so effective. It may take some time, but we don't lose trades. It'll take some time, but the market always comes back up, and as long as you're willing to hold long term, if the trade does fall into those lower buy limits, you are going to make crazy amounts of profit. Now, a combination of the scalping and holding strategy will allow you to make money both short and long term. In fact, a lot of traders will take the money they make from the scalping strategy and putting it into their holding accounts, therefore making their profits even more valuable in the long term. Our membership is extremely beginner friendly and will provide you with those scalping trade callouts and will provide you with charts that you can use to invest long term. It'll provide you with 20 crypto and 20 stock charts, allowing you to invest in just about any asset that you would like. On top of the trade callouts for scalping and the charts, you're going to get access to a community chat, masterclass courses, and a live Zoom coaching meeting every single month. Again, link is in the description. It's $75 a month, and you get tons and tons of fantastic benefits and a fully rounded trading strategy for your investments, both short and long term. With that, remember, trade safe, trade confident, and I'll see you in the next video.